The world of cryptocurrency is filled with grand experiments, a constant churn of innovation, ambition, and sometimes, outright failure. It's a digital frontier where fortunes are made and lost, and where the very nature of money is being challenged and redefined. Some of these experiments reshape our understanding of money, pushing the boundaries of what's possible with decentralized finance. Others, unfortunately, fade away into obscurity, victims of market forces, technical limitations, or simply a lack of adoption. The graveyard of crypto is littered with projects that promised the world but delivered little. The Pi Network, launched in 2019 by a team of Stanford grads, entered this volatile arena with a unique proposition. It wasn't just another attempt to replicate Bitcoin, it aimed to democratize cryptocurrency mining. Pi Network set out to let anyone mine crypto directly from their smartphone, making it accessible to a global audience regardless of their technical expertise or access to expensive hardware. The promise was simple: earn Pi coins by simply checking in daily. This was a stark contrast to Bitcoin's energy-hungry and increasingly exclusive mining process, which requires specialized hardware and consumes vast amounts of electricity. Pi Network positioned itself as an eco-friendly and inclusive alternative. Pi's key twist? Instead of relying on the computationally intensive proof-of-work mechanism, it uses social trust networks to validate transactions and secure the blockchain. This approach leverages existing social connections to establish trust and prevent malicious activity. Users simply tap a button within the app daily to prove they're real, active members of the network, and in return, they earn Pi coins. This simple act of engagement is the foundation of Pi's mining process. This low-barrier approach has proven incredibly successful, attracting tens of millions of users globally, spanning diverse demographics and geographic locations. The network's reach extends to corners of the world where traditional financial systems are inaccessible or unreliable. Pi Network focused on building a strong community first, fostering engagement and loyalty before even launching a market or exchange. This is a unique approach, prioritizing user adoption and network effects. This strategy represents a complete reversal of the usual crypto playbook, where projects often launch with a token sale and then try to build a community around it. Pi Network is betting that a large engaged user base will ultimately drive the value of its coin. Supporters of Pi Network see it as a potential path to financial inclusion, offering a way for individuals in developing countries to participate in the digital economy. It's a vision of a more equitable and accessible financial system. However, critics question its technical depth, pointing to the lack of a fully functional blockchain and the years-long wait for the coin to have real-world value. The project has faced scrutiny regarding its long-term sustainability and the actual utility of the Pi coin. Still, Pi Network's sheer scale is impossible to ignore. The project boasts a massive user base, making it one of the largest cryptocurrency communities in the world. It's uniting millions of people from all walks of life around a shared vision of a decentralized and accessible digital currency. This sense of community is a powerful force driving the project forward. The big question that hangs over the Pi Network is, when will these coins finally hit the open market and be available for trading on cryptocurrency exchanges? This is the moment the Pi community has been waiting for. The project has made significant progress, moving from initial development to a closed mainnet, a crucial step towards launching the full Pi Network ecosystem. This closed mainnet allows for testing and refinement before a wider release. But the true test of Pi Network's success will be the full token unlock, when users can finally access and trade their accumulated Pi coins. This event will determine the true value and viability of the Pi Network. That event could potentially become one of the most significant liquidity moments in crypto history, given the sheer number of users and the potential trading volume. The world will be watching to see if Pi Network can deliver on its promise and revolutionize the way we think about digital currency. To grasp Pi's upcoming unlock, let's break down how token unlocks work in crypto. Most projects create a fixed supply, but only release tokens gradually. This is called a vesting or unlock schedule. Tokens are reserved for teams, investors, and future development, each with their own release timelines. The goal? Prevent early sell-offs that could crash the price and destroy confidence. Staggered unlocks align everyone's interest and signal long-term commitment. A long vesting period shows faith in the project, a short one can raise red flags. Unlock events are closely watched. They shift supply and can trigger big price moves. A large unlock can create selling pressure, but finishing a vesting schedule can also stabilize the market. For Pi, the scale of the unlock will be unprecedented, making its impact even more unpredictable. Controlled supply isn't new. In fact, it's a fundamental aspect of economics that applies directly to the world of cryptocurrencies. Understanding how a digital currency's supply is managed is crucial for assessing its potential value and long-term sustainability. The mechanisms governing supply can range from fixed limits to algorithmic adjustments, each with its own set of implications for scarcity, inflation, and market dynamics. Bitcoin pioneered it with its halving events. This innovative approach to supply management has become a hallmark of the cryptocurrency space. Every 4 years, Bitcoin's new supply is cut in half, reducing the rate at which new coins enter circulation. This predictable and transparent schedule is hard-coded into Bitcoin's protocol, ensuring that everyone knows exactly when and how the supply will be adjusted, making coins scarcer and often fueling price surges. The halving events are closely watched by investors and enthusiasts alike, as they often coincide with significant price movements. This predictable schedule is key to Bitcoin's digital gold narrative, positioning it as a store of value similar to precious metals like gold. The limited supply of Bitcoin, capped at 21 million coins, reinforces this narrative and contributes to its perceived scarcity. Ethereum took a different route, opting for a more flexible and adaptable approach to supply management. Its initial supply came from a massive pre-sale, a one-time unlock that distributed a significant amount of ETH to early investors and supporters. This initial distribution laid the foundation for the Ethereum ecosystem and helped to bootstrap its early growth. Over time, Ethereum's upgrades have introduced significant changes to its supply dynamics, reflecting the network's ongoing evolution and adaptation to changing market conditions, like the merge and EIP 1559, have fundamentally altered the way ETH is issued and burned, impacting its overall supply and value proposition. Have slashed new issuance and even made ETH deflationary at times, meaning that more ETH is being burned than is being created. This deflationary pressure can potentially increase the scarcity of ETH and drive up its price. These changes show that even established networks, with significant market capitalization and widespread adoption, can radically alter their supply dynamics, demonstrating the flexibility and adaptability of blockchain technology. Both Bitcoin and Ethereum prove that how and when coins are released, and the mechanisms governing their supply, can define a project's value and market perception, influencing investor sentiment and long-term growth potential. Pi's upcoming unlock, however, is unique in scale and structure, presenting a novel experiment in cryptocurrency distribution. Never before have so many coins been distributed to so many people, creating a massive pool of potential users and investors, all waiting for their first chance to trade, representing a significant influx of new participants into the cryptocurrency market. The world will be watching to see how this experiment unfolds, as it could have profound implications for the future of cryptocurrency distribution and adoption. For Pi's millions of users, the main question is, when will their coins be unlocked for trading? Pi's roadmap moves from a testnet to an enclosed mainnet, where only verified users can transact, no external exchanges yet. The open mainnet, where Pi becomes tradable, is the real unlock event. The year 2027 stands out, tied to the 3-year maximum lockup period many users chose during mainnet migration. This means a wave of tokens will become liquid throughout 2027, not all at once but in rolling unlocks. Billions of coins held by millions could hit the market, one of the largest unlocks ever. The exact numbers are unclear, but even a moderate unlock will be massive. This sets the stage for extreme volatility and true price discovery as Pi finally meets open market forces. The 2027 unlock represents a pivotal moment for Pi Network, and its impact could send shockwaves throughout the entire cryptocurrency market. This event has the potential to significantly reshape the landscape, starting most immediately with price fluctuations. The sheer volume of Pi entering circulation could trigger considerable volatility. A sudden flood of new supply usually means downward pressure on the price. This is a fundamental economic principle, especially as millions of users may rush to sell their Pi coins for real-world cash, seeking to realize the value of their mined assets. The initial sell-off could be substantial, but demand matters too. It's not just about the supply side of the equation. If Pi's ecosystem truly delivers on its promise and offers real utility, providing valuable services and applications, some users may choose to hold on to their Pi, using it within the ecosystem, or spend it on goods and services, rather than immediately sell it on the open market. This behavior could mitigate some of the downward pressure. A thriving app marketplace bustling with activity and offering compelling use cases could effectively absorb much of the initial selling pressure and contribute to stabilizing the price over time, preventing a significant crash. The unlock is also a crucial reputational test for the Pi Network team and the project as a whole. A smooth and well-managed launch could validate Pi's long-term vision and attract a wave of new users and investors, bolstering its credibility. Conversely, a chaotic or poorly executed launch could severely damage its credibility and erode trust within the community. Media attention surrounding the unlock will undoubtedly be intense, with outlets worldwide closely monitoring the event. This heightened scrutiny will make Pi a focal point in the broader cryptocurrency conversation, for better or for worse. Success in navigating this challenge could serve as a powerful testament to the potential of social mining and community-driven cryptocurrency projects. However, failure could reinforce existing skepticism surrounding novel distribution models and the long-term viability of such projects. Ultimately, the market's reaction to the Pi unlock will function as a referendum on the project's entire philosophy and approach. Whether Pi ultimately becomes a revolutionary force within the digital currency space, or serves as a cautionary tale for future projects, highlighting the risks and challenges of novel cryptocurrency distribution methods, largely depends on what happens in the critical period immediately following the unlock. The next steps are crucial. The 2027 unlock brings both huge risks and rare opportunities. The biggest risk: market saturation. Millions of retail holders selling at once could crash the price. If Pi's tech or ecosystem isn't ready, confidence could evaporate and selling could snowball. But the upside is just as big. Pi could instantly become one of the most widely held cryptos, with a built-in global user base. Developers and entrepreneurs would have immediate access to millions, sparking innovation and demand. If Pi can maintain value and show real-world use, it could set a new standard for financial inclusion. For early pioneers, this is a chance to see their patience rewarded, not just financially, but as part of a groundbreaking movement. The outcome will shape how future projects approach mass adoption. For pioneers, preparation is everything as the unlock approaches. First, manage expectations. Pi's initial price will likely be low, not the sky-high numbers seen in online hype. Security is critical. Protect your wallet passphrase, beware of scams, and use only official Pi channels. Stay informed through official updates, not rumors or unofficial groups. Develop a personal strategy. Will you hold, spend, or sell your Pi? Decide your goals and risk tolerance before the market opens. A clear plan will help you avoid panic selling or impulsive decisions during volatility. Remember, in crypto, you are your own bank. Act accordingly. The right preparation can make all the difference in navigating the chaos of a major unlock. The road to 2027 is marked by crucial milestones. Watch the pace of KYC verification and mainnet migration. Smooth progress signals readiness, while delays could spell trouble. The growth of Pi's app ecosystem is vital. Killer apps and marketplaces will drive real demand. Partnerships with established businesses could provide instant utility and external validation. Pay attention to official communication about exchange listings and technical details for moving Pi. Clear, timely updates will be essential for an orderly launch. Any confusion or last-minute changes could create chaos. As 2027 nears, these milestones will reveal whether Pi is ready for the world stage. Pi Network stands at a historic crossroads. It's built a massive community on a simple, promise-accessible, fair crypto for all. The 2027 unlock is the ultimate test. Can Pi's vision survive the open market? No project has ever attempted a distribution of this scale. Success could inspire a new wave of mass adoption projects. Failure would be a cautionary tale. The next chapter will be written by the interplay of supply, demand, and community strength. For pioneers and skeptics alike, the coming years will be filled with lessons and surprises. The world is about to witness the results of this bold experiment in digital democracy.